Hello, everyone. Thanks for joining us today, and welcome to this week's educational presentation, where today I want to talk to you about the 4 steps to trading consistency. Now, if you're new to my webinars, each week I talk about a different strategy, a technique, a method, or even an indicator that we try to teach you to help you with your trading. But today we're going to be doing something different. Today, with these 4 steps that you can add to virtually any method, it really makes absolutely no difference. I don't care what strategy you trade. I don't care if it's based on fundamentals, if it's based on your own indicator or some other strategy that you purchased from another educator. It doesn't even matter if it's purchased off astrology. I really don't care. The main thing is we feel that if you add these 4 steps to any method, any trading technique you're using, you will increase your odds for consistency. So this is what we're going to be talking about today. For example, let's take a look here at this older chart of Adobe. Now get used to this chart because we're going to be showing you this a lot. Someone looking at this would say, well, Steve, I think we are in a downtrend, right? We're making lower highs and lower lows. So if we're in a downtrend, I either want to avoid it or maybe even sell. Okay. Well, with the first step I'm going to be sharing with you today, you would have known that you weren't in a downtrend. You were actually in an uptrend. And therefore, if you were in an uptrend, you want to be a buyer. So let's say you decided to buy at this point right here. The next step would have told you where to place your stop. The next step would have actually told you how to protect the trade. And the last step would have told you where to exit, which would have been at this point right here. And potentially in the following days, you could have captured 22.5 points, all by applying these 4 steps, which I'm going to share with you today. So this is what we're going to be talking about today, these 4 steps to trading consistency. And you'll be able to apply as early as today if you'd like. Now, everything you're seeing today is coming displayed on the PTS Primo charting platform. I developed this platform with Pro Trader Strategies to actually teach traders how to trade. So welcome everyone to our weekly webinar. My name is Steven Primo. I am the president and founder of Specialist Trading. I've been trading now for 48 years, almost 5 decades since I first started on the floor of the Pacific Stock Exchange. I was on the floor, the trading floor, for 16 years, and 9 of those years I was a specialist. That's where we get the name Specialist Trading. A specialist is just someone who specialized in making markets in roughly about 50 or 60 stocks. So I made markets during the crash of 87 and the bull market that followed. So I've traded just about every market environment you can think of: straight up markets, straight down markets, crashes, sideways markets. And in my 48 years of trading, I know what works in terms of consistency and I know what doesn't work at all. So that's why about 15 years ago, I teamed up with Pro Trader Strategies and we formalized Specialist Trading with one goal in mind: to simply educate traders all the things that I've accumulated in my nearly 5 decades that have very high levels of consistency. And you'll see that in today's educational presentation, because we are first and foremost an educational company, and that's really our goal: simply to educate you so that you can make your own trading decisions. As I almost say in every webinar, if there's one thing I've learned in nearly 50 years of trading, it's that the only traders that are still consistent, not the ones that have maybe a couple of good months or even a couple of good years, but the ones that are still trading for decades, are the ones that make their own trading decisions. So our goal is to provide you with high probability setups, techniques, and consistency so that you can make your own trading decision. This is, in my opinion, the only way one becomes a successful and consistent trader. And you'll see that in today's class. Now, before we begin, we are required to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results using and applying these 4 steps, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And since we are first and foremost an educational company, all examples I'm about to share with you are strictly for educational purposes only. Now, we have a pretty good group here today. I see a lot of new names. So if you haven't followed us before or would like to follow us, please, here's our handle for X, formerly known as Twitter. It's at SPCLST, Every day I post upwards of 5 to 7 different snapshots of signals that our methods have generated, as well as little bits of financial wisdom. So there's lots of great free education on X on a daily basis. Now, another way to follow us and to get more education is to subscribe on YouTube. And as you see, if you're following us on YouTube right now, just hit the subscribe button. You'll see a lot more of this content coming in the following days, okay? All right, with that stated, let's begin today's educational presentation. And I want to start out with something that my mentors told me when I was first trading, and believe it or not, my first couple of years, I couldn't make a dime. I was really struggling. And the main reason was because I was overcomplicating things. I was probably looking at, dozens, if not hundreds of different indicators all at once. I was following far too many so-called trading gurus. We didn't have chat rooms then, but we had newsletters. I've subscribed to all of them. Every bit of fundamental news I was following, earnings reports, economic news, jobless claims, money supply, anything you think of. And guess what? Nothing could work in terms of consistency. And my mentor said, Steve, trading is really simple, but it's the trader who makes it more difficult than it has to be. So if you're having difficulty right now, if you're struggling, look at what you're doing. Oftentimes you are overcomplicating things. Too many indicators, following too many so-called gurus, too much fundamental news. Just keep it as simple as possible. That's how you get on the road to consistency. It's more about deleting things and letting go of things as it is opposed to adding things onto your trading plan. So in order to become consistent now, you must always apply these 4 steps. So here's what we're going to do. We're going to go through each one step by step. Now, firstly, this is being recorded, so don't worry if you didn't copy everything down. You say, wait a minute, I missed that 3rd step. Don't worry, it's extremely simple. It'll resonate really easily, but if you don't get it, don't worry. Each and every one of you will be sent a link to this recording, and you can study these steps over and over again at your own leisure, okay? Okay, step number 1. Ask yourself, am I on the right side of the market? I know that seems overly simplified, right? But think of it. Every time you lose, it's because you're not on the right side of the market. In other words, if you buy and the market goes down, you're not on the right side. You're out of sync. And if you sell, by meaning not sell with a profit, but sell short, betting for the market or whatever you're trading to go down, and it goes up, you are not on the right side. So this is the first thing you have to do. You have to establish that you are in sync. You are on the right side of what the market wants to do. Now, looking back at our benchmark chart here, Adobe, that's older chart. Remember, we thought that we were originally in a downtrend. It looked like we were going up and down and sideways, but we were making lower highs. But here's what we do. We tell all of our students, regardless of what time frame, regardless of what market, it makes no difference to apply a 50-period simple moving average. So go do it right now. Whatever chart you're looking at, whatever platform you have, always have a 50-period moving average there on the chart. And then the first thing you do is ask yourself this question. Where is price in relation to the 50-period simple moving average? Whether it's a 5-minute chart of the E-mini futures or a monthly chart of crypto or a weekly chart of Apple, it makes no difference. Where is price at this moment in relation to the 50-period? Now, as in this case, in this scenario, price was above, right? So if price is above, what is the market telling us? Not some guy in a webinar, not some guy in a chat room, or not some interest rate report or some earnings report. What is the market telling you? The very thing you're trading. It's telling you that if price is above, the overall trend is up. It's as simple as that. And if the overall trend is up, we will only be a buyer. We're not going to be a seller. Now, a couple of things to remember here. The more bars above the 50-period simple moving average, the better the odds in your favor. Now, this doesn't mean that you can have 1 bar above and you can have a strategy or a technique generate a buy signal. That's okay. And I'll show you an example of that later on. But the more bars above, anywhere from 3 to 5, will give you better odds of telling you what the overall trend is. So right now we know that we're not in a downtrend. The overall trend is up. So that means we're going to be a buyer. Now remember, you don't have to use one of my strategies. You can use whatever you'd like. Let's say you are a candlestick trader, okay? Well, what do we have right here? A bullish engulfing pattern. That's a very positive signal coming from candlesticks to the upside. So you're in sync with the overall trend, and you're using something that you think has some consistency. So that's fine. It could be, once again, any other strategy. It could be based on the full moon. It could be based on technical analysis. It makes absolutely no difference, but you'll have more odds for success if you are in sync with the overall trend. In fact, if you don't believe how powerful this simple tool is of applying the 50-period moving average, go back and look at your last 10 or 20 trades. As I often say, I can almost guarantee the reason you had losers was because you were out of sync with this simple rule. You were buying below the 50-period moving average and selling above. Remember, Trading is a numbers game. We're not going to guarantee that we're going to get it right every time. That's okay. Okay, I may be, today I had a total of about 5 trades before we began. I intraday trade the E-mini, and 2 of those were losses. They were losers. But the 3 trades I made were able to make back my losses and give me a profit on the day. That's the way trading is. It's a numbers game. So we're looking to put the odds in our favor, and one of the best ways is by applying the first step, the 50-period simple moving average. All right, so let's say we wanted to buy right here once price trades above the second bar in that engulfing pattern, okay? So now we have a plan for entry. This now leads us to step number 2, which is, where do I place my initial stop? I know most of you would say, wait a minute, I thought I should know where to get out with a profit. No, that's wrong, because that's the way most people think. You're always thinking about, well, I'm going to be right. So how much money do I want to make? Well, that's great. That's a great positive attitude to have, but you should always think about where you're going to be wrong, because remember, we're trying to be in sync with the market. And if we're out of sync, we have to get out right away. So we have to know, where do we place our initial stop to protect the trade once we're in. Now, in our courses, we have upwards of 6 or 7 different stop placements for all the different types of traders. Remember, our job as an educator is to provide you with this information so that you can decide which one you want. Some traders like a lot of risk. Other traders like minimal risk. Some traders like to enter a certain spot. Other traders like to enter at other spots. So we provide you with all of this. Let's just use one of our most benchmark and standard stop placements, which is the most recent low, a pivot low, as you say. So if we were to enter here, we go back in time and see what was the most recent low. And that would be this right here. And it kind of creates this V approach right here. A low is, you have a 3-bar pattern. You have a low followed by a lower low and then a higher low. So basically what price says, if we are to go below that, most likely the trend is going down now and we're going to be stopped out. So this is where we want to place our stop. This is a standard generic place to apply a stop. As I said, in our courses, we have upwards of 7 different stop placements. This is just one of them, okay? This leads us now to step number 3. Now we can ask the question, what is my profit target? Now, why are we waiting until step number 3 to ask our profit target? Because it's based on where we place our stop. Let me show you what I mean here. If we were to enter at this spot right here, and let's say the trade went against us, we got in and then immediately went down and we got stopped out. How many points would we lose? Not how many dollars, how many points would we lose? In this case, it's 11.25 points. So what we want to do in order to become a consistent trader, you always want to make at least twice what you're risking. So if we're risking 11.25 points, remember, this is not a dollar amount, this is a point amount. We simply have to double that. So we want to make twice our risk. We want to make 22.5 points. So now we automatically know where to place our exit. This is called a fixed exit, and we will exit right up here at the top at 22.5 point gain, or the number is 247. So we haven't even entered into the trade yet, but we already know where we're going to buy. We already know where we're going to place our stop if we're wrong, and we already know where we're going to exit if we're right. You see, this is the way trading should be. You have to have a plan in place. And this brings us now to the 4th and final step, which is, how do I protect my profits? Now, I've often said one of the worst feelings in the world is to have a profit on paper. You're in the middle of a trade, you're holding on to it, then you walk away, or maybe if you're holding position overnight, you forget about it, and then you come back the next day and it's turned into a huge loss, right? This is one of the worst feelings in the world, because you had an emotional feeling like you were winning, you were doing well, and you were counting your profits, licking your chops, as they say, but you hadn't exited yet. Now it turned into a major loss. And now you're hoping and praying that it just comes back to break even, right? So you always want to protect when you have a profit on paper. And this is one of the simplest but most powerful ways I know which to do. And I apply this every day in my own personal trading. It's called the 50% rule. So how does this work? Well, if we are going to be entering here and we're going to be exiting here, we want to know that when price gets halfway, or roughly around halfway to that exit point, we will raise the stop to unchanged. So the 50% rule is just half the distance to the exit. So when price gets close to there or touches there, we want to move this stop to unchanged. Now remember, it does not have to stop. This is not, the market doesn't know where your 50% level is. It just does whatever it wants to do. It's like a river. So what we want to do is say, listen, if it gets there by watching the market, if it gets close to there, we can use our discretion as to where we want to move the stop. So let's track the trade. Let's see what happened. We haven't entered yet, and now we entered. It traded above that bar, that candlestick bar. And so we're tracking the trade. It's going in our direction. It's getting close to that 50% level, and now it has touched it. Now, once again, even if it got close to it intraday but didn't touch it, we could move this up to unchanged. But once it has touched it, you want to move this stop. You want to move it, cancel it, and make it the stop to your entry price. Now it's what we call playing with the house money. You have nothing to lose. If all of a sudden, price all of a sudden turns around and starts to come lower, well, you don't sit there and go, wow, I had a profit last week. Now this has turned into a major loss. Now I guess I'm a long-term investor. That's what happens to so many traders. We've all been there, where you're trading and you look really good for a couple of days, maybe a week, and then all of a sudden turn into a lousy trade. And now you're just wishing for it to turn around. This way, at least you won't lose anything. You'll break even. So let's go to the fifth and final step, which really isn't a step, but it's just now the only thing left to do is just to watch the trade unfold. Because I've often said, if you are trading correctly, it is extremely boring. It's like fishing. You basically get in the boat, you cast your line, and you just sit and you wait. That's the way trading should be. But for some reason, we think it's supposed to be sexy and exciting, like we see in the movies. 5 screens in front of you, 2 phones ringing at the same time, headpieces on, 5 TVs going, yelling and screaming. That's not the way trading should be. If you're trading like that, you're not really trading, you're gambling. It's more like you're in a bucket shop. You're gambling. But if you're trading correctly, it's very boring. Okay? You just have to remember, it's like fishing, because you've done everything. You have your plan in place. You've entered, you've placed your stop, you've placed your exit. Now you just simply wait. That's the way trading should be if you want to be a consistent trader. So let's watch the trade unfold. We're now at the 50% level. We've moved our stop, as we see here, to where we entered, and we just sit back and wait. Everything's in place. There's nothing to do. There's nothing to really overreact about. We just sit back and see what happens. We're either going to get stopped out unchanged, or we're going to have a nice profit. So as we wait, it's starting to go in our direction. And then ultimately, we traded there. We got out with a 22.5 point gain. We didn't have to look at any earnings. We didn't have to look at what was going on economically, or who was in office, or what was going on, what someone said, or what someone did, or even we didn't have to go to even any chat room. Remember, trading is simple. It's the trader that makes it more difficult than it has to be. Simplify your trading, get rid of half the what my mentors called noise, and you'll start to become a consistent trader. Let's look at the next example, okay? Here's an older chart. Once again, this time we're looking at FSLR. All right, let's say this time you're a technician. We have another student here that says, no, I'm a technician. I like to look at technical analysis. And Steve, according to the things I've studied, this is a classic bullish wedge. Now, the way this works is if price closes above this little down wedge here, closes anywhere above this line, that's a very bullish sign. And most likely it's going to come back up to these old highs. This is standard technical analysis 101. Okay, so that's your plan. You're waiting to see if we close there. And lo and behold, in the very next bar, we close above there. So you're all excited, right? You want to buy. So you buy at the close. You tell yourself, gosh, I can't wait. I'm going to make a ton of money, and I'm all excited about this trade. All right. But did you follow the 4 steps? No. Let's follow these 4 steps once again. Step number 1, ask yourself, am I on the right side of the market? In the following example, did we apply the 50-period moving average? No, we did not. So we don't know if we're on the right side of the market. Let's apply it. And as we put the 50-period moving average up there, we see that, well, for a small amount of time, it was above, but for the last 1, 2, 3, 4, 5, 6, 7 bars, we have been below. So the odds are the market is not going to go up. And that's coming from the market. It's not coming from me. It's not coming from somebody in chat room or on TV. It's coming from the market, the source of what you're trading. It's telling you, most likely I want to go lower. Remember, our job is simply to get in sync with whatever the market wants to do. We're not supposed to dictate and predict what the market wants to do. We just see what it wants to do and then jump on board in that direction. And right now it's telling us that most likely the direction is going to go lower. All right. So let's say you took this course or you saw this video and you said, all right, well, I ask myself, where is price in relation to the 50? And it's below. So, okay, I'm not going to be a buyer after all. But remember, you're still a technician, right? You don't like to look at fundamental news. You like to look at technical analysis. So you say, all right, well, if I'm going to be a seller, how could I sell? And you see that it does go in your direction and you were right. So maybe you find a ledge right here or some type of support. You say, all right, well, if it breaks that ledge, if it breaks that support, then I'll go short. All right. So that is your point of entry. That is your strategy or system that you're going to be trading. You will be selling short, buying the puts, whatever you want to do. It's up to you if we go below that little ledge or that support line. This leads us to step number 2, which once again is, where do I place my initial stop? Now let's use the standard benchmark stop again, which is the most recent high in this place. Since we're going short, we only want to place our stop at the most recent high. We need that 3-bar pattern, which is right here. We have a high, followed by a higher high, and a lower high. So this is the most recent high right here. We'll place our stop right there. So if we're going short, we're going to enter when price trades below this little ledge, and we'll place our stop right here if we're wrong. Step number 3, what is my profit target? Well, once again, this is determined by how much we're going to lose if we're wrong. So if we went short right here, let's say we bought the puts or we went short and we had to cover up here, we had to get out of the trade. Remember, this is based on what the market you're trading is doing, not off what the option is doing or the future, whatever you're trading, just based off points. How many points would you be losing? In this case, it would be 8.20 points. So we say to ourselves, okay, if we're willing to risk 8.20, we want to make at least twice that amount. So twice that amount is 16.40, right? So now we simply, since we're going short, we subtract that from our entry point, 16.40 points, and that would be right down here. So this is where we're going to cover our short. We're going to make twice the amount of risk right here, and that number would be 51.15. Okay, which leads us to the 4th and final question. How do I protect my profits? By applying the 50% rule. The same thing. If we were to enter here and we were to exit here, cover our short, the 50% rule would tell us once we got close to half the distance, we would move this stop to unchanged. So now we have a plan in place. Once again, we have not even entered into the trade, but we know where we're entering. We know where we're getting out if we're wrong. We're sacrificing roughly 8.20 points. We know where we're getting out if we're right with a profit. We're making 16.40 points. And we know where to move our stop if we have a nice little profit on paper. Okay? We have a great plan in place by using these 4 simple steps. Now, did I mention anything about earnings here? Did I mention anything about what's happening in the White House or what they said, some economic plan or policy? Did I mention anything about maybe something is overbought or oversold? No. This is a simplified plan, and this is the way you become a consistent trader, by releasing all of that, what my mentors called useless noise, and just focusing on the source, which is the chart in front of you. That's it. So let's see what happened. Well, 1, 2, 3 days. It only took us 3 days for us to get to the 50% level. So what does that tell us? We're going to cancel this stop and move it to where we entered to go short. Move it to the entry price. So now, once again, we are playing with house money. We're not risking anything. So if it all of a sudden turns around and goes straight up, we're okay. We didn't lose anything. Remember, it's all about protecting our profit, even if it's a paper profit. Which leads us now to the only thing left to do is to watch the trade unfold. Remember, we're fishing. It's boring. We're in the trade. There's nothing left to do. We don't have to worry and look at what the news is saying or worry about what other traders are doing. Just sit back and relax. That's the way real traders trade. So as we watch the trade unfold, it's going in our direction and ultimately got there. Just touched there. We made 16.40 points, okay? So these are the 4 steps to trading consistency. Remember, if you are trading correctly, it's very, very boring. But as we say right here, trading consistency relies on simplicity, not on overcomplicating things. It's the easiest thing in the world to overcomplicate your trading. It doesn't take a lot of character and a lot of experience to do that. You can literally be trading for a week or two and make your trading so complicated. You can apply every indicator, look at every chat room or trading room, or listen to all the news, and you can overcomplicate your trading just off trading a couple of weeks. But it takes more character, it takes a lot of courage to simplify and let go of all these things that really don't have high levels of consistency. Now, let me show you some more examples here. These are more recent. Here's a hourly chart of the British pound for currency pair traders here. This just happened on the 3rd of March, okay? This was just Monday of this week. Now here we have actually one of our strategies generating a buy signal. This is a strategy number 4, buy signal, I believe, okay? Now, this is where we'd enter either off the close or once it traded above, and we use the standard benchmark stop of the most recent short-term low right here. So based on that amount of risk, we simply doubled it, and here was our exit point. Here was the 50% level. Once we got to the 50% level, we moved this stop to where we entered. But we never had to worry because it kept going up. And look how it got right up to that level for exit, and we made, in less than a day, 95 pips. Now, 95 pips roughly comes out to roughly about $950 per unit. So you could have potentially made that in less than one day, just trading one currency pair unit, okay? That just happened a couple of days ago. Here's an example of something that happened just about a month ago. Here's a buy signal using another one of our strategies in Airbnb, okay? Now, we're using a different stop placement because, as you notice, this is a large bar here. And if we were to enter on the close to go long, that's a lot of risk. So someone who doesn't like a lot of risk would say, I'm just going to place my stop just below this low of this bar. All right, so we measured where we'd entered to where our exit would be. We doubled that. Here's our exit point. And we didn't even have to worry about the 50% level because in 2 days, we opened up and gapped up higher. We exited in 2 days with a 17-point gain using this simple process. And then lastly, this trade is actually still ongoing for the currency pair traders. Again, here's an example in the euro dollar. Here's a daily chart. We are above the 50-period moving average. Here's our buy signal using another one of our strategies. We use the standard benchmark of the most recent low right here. So we measured from here to here and we doubled it. Here's our exit point. Now in the next day or two, we got up to the 50% level. So now this stop has now moved up to, if you're trading this signal for currency pair traders, we have moved this up to unchanged. So once again, we have nothing to risk. We're playing with house money. So this is an ongoing trade. Now, a lot of our traders, if they trade multiple units, what they like to do is say, well, listen, Steve, maybe I had 2 contracts. Well, I'll sell one at the 50%. And then the remaining one I'll have unchanged. I'll have a stop here for one. And so if we get up to the exit point, I'll just exit one. So that way, if we do turn around and come lower, well, at least you made a profit on one contract, all right? So there's lots of ways to do this. It's up to you. Remember, our job is to provide you with tips, techniques, and education that has stood the test of time with high levels of consistency, and then work with you so that you can make your own trading decisions. I want you all not to just have a good month or a good year, but a good decade of trading. And this is how you do it, by becoming a consistent trader using these simple things that have taken me nearly 5 decades to accumulate. Okay, let me tell you about a great special offer. If you like what we talked about today, you're going to love this great offer because we're going to be offering you our 10-video course. This is our Trading Floor Edges course. It's 10 videos, more high probability trading edges, just like what I shared with you today, but completely different ones based on different ideas and different highly consistent methods. 2 techniques that will elevate your trading. Once again, you can apply to any method, any strategy. Once again, showing you how to be in sync with the overall trend, but I'll share with you 4 different ways in which to do that. 3 steps to a successful trade. How to fine-tune your entries. A lot of times, our students have told us they actually lose in a trade, not because their strategy or their system is faulty, it's because their entries are inaccurate. So we tell you how to fine-tune your entries. Next level exiting techniques. If you'd like to exit with a standard basic exit or really hold on to, and catch as much profit as possible, we show you how to do that. Here's what I think is the best thing in this 10-video course. It's what we call our superior candlestick trading edge. Let me give you an example of how this works. Let's look at this example here in PLTR. Obviously, we've been in an uptrend, right? Now, the way candlestick trading works in the conventional sense is we look for reversal patterns. In other words, we look for a trend to go in the opposite direction. So if we're in a current uptrend here, we're looking for candlestick patterns that are telling us that that trend is going to end and it's going to reverse to the downside. And what do we have here? Well, we actually have two of them. Our first is a dark cloud cover pattern, a very bearish pattern, which tells you that most likely the trend is going to change, followed just bars later by a bearish engulfing pattern, probably one of the most prominent bearish patterns, telling you that a move to the downside is most likely imminent. So let's say you're a conventional trader of candlesticks. You took that $10,000 course. You said, well, gosh, I've got to go short this, right? I've got to sell because the market is telling me this is going to really scream to the downside. So you go short, maybe you buy the puts, or maybe you shorted the stock, and look what happens, okay? Does this look familiar to anyone? It's because using candlesticks in the conventional mode really don't have high levels of consistency. I will show you a super edge to trading candlesticks where you would not have sold here at all. In fact, based on the bar before that bar, you would have actually been buying, and you could have taken advantage of that nice little upward move. So this is the superior candlestick trading edge that you will learn in the course. This is just one of the dozens of things we teach you in this 10-hour video, or I should say 10 video course. Now, let's break it down. Normally, there's so much information jam-packed into this course, it costs close to $1,000. Here's what we're going to do, but for a very limited time. We're discounting this price down to only $19. $19, that's right. Think of it, from nearly $1,000 down to $19. But as I said, this is for a limited time only. I believe it's Wednesday today, right? This is probably only last until the weekend. $19, you most likely can't even go out to get a cup of coffee for two for less than $20 these days. $19, this is really 5 decades of information that I've accumulated that's taken me that long to grasp and to teach you, and it's yours for life. So take advantage of this, but we're going to step it up a little bit even after that. We have a special extra bonus included. If you decide to take advantage of this $19 course offer today, which is only for the next couple of days, we will also include with your purchase a 50% discount on any other product we sell. So let's say you watch this 10 video course and you say, gosh, this is amazing. I'd like to buy one of these strategies. Well, you'll get a 50% discount on that. Or let's say you watch it and you say, boy, I'd like that indicator he talked about. Is there any way I could purchase that? Yeah, you get 50% off. This is another great bonus we are including just as our way of saying thank you, and we'd like to really make you a consistent trader. You owe it to yourself to take your trading to the next level. If you're struggling, if you're really getting depressed thinking they're just seeing money going out and not money coming in from your trading, don't worry. I've been there. My first 2 years of trading, I couldn't make a dime, so I know what that's like. It's extremely frustrating and depressing, but don't worry. It's taken me 5 decades to accumulate these things. I can hopefully turn your trading around with it, okay? And for $19, I can't think of a better way to come on board. So here's how to take advantage of this great offer. Contact my sister site, Pro Trader Strategies. They're in charge of all the discounts, all the pricing, as well as tech support. They would be happy to take your order over the phone. Probably the easiest way to do it is just to give them a call at area code 310-598-6677. Their trading consultants will be happy to take your order phone or answer any question that you may have about other strategies that we offer. Now, that link you see at the very bottom is the link that will take you to the info page. There's more information there, so you can look at that. Now, it's not a live link, but they just posted a live link in the chat box. So if you click on that chat box there, you'll see a little icon there that says chat. Click it on and you'll see a live link. And you can click that on and a browser will open up and you can read that, okay? Now I'm going to reserve the last portion of this webinar for any questions that you may have. If you do have any questions, just go to the question and answer box or to the chat box, and I will answer all of them to the best of my ability. Someone's saying, do these techniques and methods in your course perform well in different market conditions? Yes, that's probably one of the best things about everything we teach. I know a lot of traders and a lot of so-called educators have this fantastic method or technique or indicator, and then you realize it only works on one market and one time frame, and it's very select, and that's not the way trading should be. If something has a high level of consistency, it should be able to transfer onto any market and any time frame and any condition. So yes, I'm happy to say that everything we teach in our courses can be applied to any market condition, any market direction, any time frame. It makes absolutely no difference, okay? Someone's asking to please repost this recording. Well, we don't have to repost it. Each and every one of you will get a link to this recording. So you'll be able to watch at your own leisure, okay? Let's see. Once we learn these, are there any extra costs like subscription fees or data or platform fees? No. Once you pay for something, that's it, unless you establish some type of a payment plan. But this is probably a better question to ask Pro Trader Strategies. In other words, if you purchased, let's say, our platform where you saw all the display coming today for all the charts, you can either purchase that through a payment plan or a one-time fee, and there's no subscription fees or later any fees that come on with that. If you decide to resubscribe, let's say after a year, well, sure, they would be happy to work with you on that. Question. Someone says, I use strategy 4 to get out of XOM today. Good move. You know what? I haven't seen XOM. I don't have that capability in front of me. But if you have a profit, then yes, that is a good move, because anytime you have a profit, that is a good move. I know it was tough for me in the beginning when I first started trading. I would exit and then I'd see something continue to go higher and higher. But then, when I'd have the losing trades and I just wish for something to help me, it didn't really, help that I hadn't exited yet. So remember, if you have a profit, that's fine. So XOM, for all of you out there, if there was a strategy 4, if you're a strategy 4 trader, check it out. XOM on a daily time frame, I imagine, probably had a nice trade there, a good move. Okay. Any other traders there? Do these include exit methods? Yes. As we said earlier, with all of our entries, stop placements, and exits, we have upwards of 7 different ways. As I told you, our job as a mentor is to provide you with this information and then work with you so that you can decide. Are you the type of trader that wants to get in and out quickly? Would you like to exit and stay in for the long haul? It's entirely up to you. Okay. Someone's saying, have you been using this system? Yes, everything I teach and trade, I use and have used. I'll go in and out of things. I'm not going to teach something that I don't personally use or haven't used. These all basically come from things that I have used, and I decide to make them a lot simpler for traders. Sometimes I change and alter them to meet my needs, but that's what we want, and that's what we encourage from you. Some traders say, well, Steve, I purchased one of your methods that you use, but I use it a little bit differently. And I'll say, that's fine. That's what I want. I want you to be able to do that, okay? As long as you're able to use something with a standard benchmark, that's great. Okay. Question, does this technique, let's see, this technique and others know how to avoid flat markets and signal only when markets are moving high up or low down? Yes, we have different techniques for that, but one of the best ways is to apply that 50-period moving average. And if, a market is going sideways or just going flat, it will go up and back down above that 50-period moving average, not giving you enough time to establish an overall trend in any direction. So that's one of the best tools to get you out of those whipsaw markets. Good question. I have used strategy 4 and PET D. What other products do you recommend? Well, I don't want to go into, that's probably a better question to contact Pro Trader Strategies. There are, today, all we wanted to focus on were these 4 steps and get you, used to the basics and the basic benchmark of trading to elevate your trading. We have other techniques. We have other methods for strong up markets that go just straight up. We have other markets for tops and bottoms. It's all what you want. I would highly recommend giving Pro Trader Strategies a call. You can ask them about that. There's absolutely no obligation. Don't worry if you call up and contact one of their trading consultants that you'll have to buy something. They'd be happy to answer any question that or any other methods that I recommend. And they can even, you can even ask for some snapshots of a current method, and we'll send you some snapshots of strategies or signals that those methods have generated, okay? So that's why we always say contact Pro Trader Strategies. They're there to work with you. Their trading consultants are highly knowledgeable, and they'd be more than happy to answer any question you may have, okay? All right, looks like we're at the end of today's presentation. I hope you learned something about how keeping things simple can make you a very consistent trader. Keep it as simple as possible, and you will be that much more closer to becoming a consistent trader than by making it more complicated than it has to be, okay? Remember, if you have any questions or if you'd like to take advantage of that limited offer of $19, please do not hesitate to contact Pro Trader Strategies. Give them a call at area code 310-598-6677. As we conclude and take one last look at our disclaimer, thank you so much for attending today. I really wish you all the best of luck, but I look forward to all of you taking advantage of the special offer and being in our special 10-video course of stock market trading edges. Hope to see you in class. Bye-bye. Have a great day, and I'll see you next time. Bye-bye.